All right, everyone, welcome back to the podcast, episode 219. Mark here, ready to dive into the somewhat twisty world of corporate maneuvers.
Hey everyone, Jenny joining you. And yeah, Mark, twisty feels appropriate for what's been happening with Xanadu Mines lately. It's been active.
Active is one way to put it. We're drilling down on Xanadu manganese, and boy have they given us material. EGMs, extraordinary general meetings, results, cancellations. It's a whole corporate soap opera.
Right? You see these public announcements and you know there's a lot happening behind the scenes. So let's break it down. April 11th, they had this EGM. What was the main event there?
Okay, so the official agenda listed two key things. Resolution 1 was focused on a put option, a 25% one, specifically. And Resolution 2 was about getting shareholder approval to ratify some shares they'd issued before.
A put option? It sounds finance. For those of us, myself included sometimes, who aren't steeped in the jargon, what does a put option mean in a situation like this, and why would shareholders even need to vote on it?
That's a fair question. Think of a put option like this. It gives someone the right, but importantly, not the obligation, to sell a specific asset, or shares in this case, at a price fixed now, by a certain date in the future. In Xanadu's situation, with their ongoing work and potential partnerships, it likely pertained to an agreement tied to future funding or a joint venture, perhaps with a significant player like Xanadu Mines, who they've collaborated with on their Karmagtai project.
Xanadu. They come up a lot when you talk about Xanadu.
They do. And the reason shareholders might need to approve it comes down to ASX Listing Rule 10.1. This rule is there to protect investors. It essentially says that if a listed company is making a significant deal, especially with certain related parties or major shareholders, you need the sign-off from the company's owners, the shareholders. It prevents behind-the-scenes deals that might not be in everyone's best interest.
Okay, so Resolution 1 about this put option was a potentially big deal, potentially involving a key partner. Did the shareholders get to vote their approval or disapproval?
Nope. And here's the interesting part. Resolution 1 was pulled, withdrawn completely earlier in April, even before the EGM took place. So it wasn't debated or voted on at all.
Withdrawn? Just vanished from the agenda? That feels a bit abrupt. Any insight into why they changed course so late in the game?
Well, the company's announcements indicated it was a strategic decision. These kinds of options and agreements are often part of ongoing negotiations. When discussions are dynamic, terms can change, or a different path might become more appealing. Pulling the resolution suggests those ongoing talks, possibly with Xanadu or others, led to a point where this specific put option structure wasn't the path they were going to pursue at that moment. It's about keeping the market informed, even if it means a shift in publicly announced plans.
That makes sense, I guess. It highlights how fluid these corporate deals can be. Negotiations happening right up until a vote is supposed to happen. It must feel a little unstable for shareholders, seeing things change so quickly.
It can, for sure. On one hand, it shows they're actively working and adapting. On the other, frequent changes like this can raise questions for some investors about the certainty of future plans. It definitely underscores the importance of staying on top of company announcements. It's part of that continuous disclosure obligation the ASX mandates. You have to tell people what's going on, even if it's a change of direction.
Right, so Resolution 1 out. What about Resolution 2, the one about ratifying the shares they'd already issued?
Resolution 2. This one went ahead, and it passed. Quite convincingly, actually. They were seeking approval for the issuance of 110 million shares that had been issued previously. This is pretty standard practice after a share placement or other fundraising. It gives shareholders a chance to essentially rubber stamp that the company's actions were appropriate.
And the vote was a strong yes?
Very strong. Looking at the results, we're talking over 862 million votes, times 4 times the resolution, which translates to about 96% approval. The votes against were only around 30 million, roughly 3%. That's a solid endorsement from the shareholders for that particular fundraising activity.
So despite the first item on the agenda being withdrawn, the shareholders were clearly supportive of the company's move to issue those shares. That must provide the company with some confidence in their financial strategy moving forward.
It absolutely does. Getting that level of ratification, with such a high percentage of the vote, validates their decision to issue those shares. It's a way for the company to strengthen its balance sheet and bring in capital, which is essential for a mining company like Xanadu, actively working on copper-gold projects in places like Mongolia.
Speaking of their projects, like Karmagtai, how do this share ratification and the capital they raised, like the 17 million Australian dollars placement we discussed, directly benefit their exploration and development activities?
Capital is the lifeblood of mining exploration. Big projects, especially those involving drilling, extensive feasibility studies, and potentially building infrastructure, require significant investment. At 17 million Australian dollars placement, coupled with having the prior share issuance ratified, equips them with the financial ability to keep those projects moving. It means they can maintain their exploration programs, chase new drilling targets, and potentially speed up the overall development timeline.
Right. More financial capacity generally means more boots on the ground, more drilling, and a better chance of finding and developing resources. Okay, you mentioned another EGM was originally scheduled for June. What ended up happening with that one?
And here's where the plot thickens again. Yes, a June EGM was initially announced to discuss other potential corporate actions, likely related to further strategic arrangements or transactions. But similar to the put option, that June EGM was also canceled.
Canceled again? What was the reason given for pulling that meeting?
The announcement pointed to a new agreement they had entered into as the reason for the cancellation. Specifically, they mentioned a new agreement with Bastion Mining. This new arrangement appears to have changed the corporate landscape enough that the original purpose for the planned June EGM was no longer necessary. It signals another shift in their strategic focus, perhaps a different partnership or a reconfigured deal that didn't require that specific shareholder meeting.
So they withdrew one key item from the April meeting and then just outright canceled the June meeting because a new deal changed things. It certainly sounds like Xanadu's corporate strategy is highly adaptable right now.
Adaptable is a good word. It also suggests they're actively exploring different avenues for partnerships and funding to advance their projects. It's a dynamic period for them, that's for sure. Companies in the resource sector often have these periods of intense corporate activity as they seek partners and capital to de-risk and develop assets.
Put it all together. The April EGM saw a significant resolution pulled, but also overwhelming shareholder support for their previous financing through share issuance. Then, a planned June EGM gets scrapped entirely because they've lined up a new strategic agreement. It's a rapid-fire sequence of corporate moves.
It does highlight the need for companies, particularly those involved in larger-scale transactions or developments, to be quite agile and transparent, even when plans shift on short notice. It's corporate governance and market communication in action, sometimes unpredictable, but with the goal of keeping operations compliant and investors informed.
And for investors, it's a good reminder to keep a close eye on those company announcements. They're not just formalities. They signal potential changes in direction and future prospects.
Couldn't agree more. It's all pieces of the puzzle when you're assessing investment opportunities in the resource sector. There's potential opportunity, but it certainly requires diligence in tracking these corporate developments.
That was a deep dive into what's been happening behind the scenes at Xanadu Mines' corporate calendar. Thanks, Mark.
Anytime, Jenny. Good getting into the intricacies of these mining, finance, and strategy moves.
All right, everyone, that wraps up episode 219. We appreciate you tuning in. We'll catch you on the next one.
See ya!